India just built one of its biggest energy wins in years. And now it has a problem. Too much of a good thing and not enough people drinking it. Here's what happened. India's ethanol production capacity, that's the plant-based fuel made from sugarcane, maize, or rice, has gone from 684 crore liters in 2021 to a projected 1,800 crore liters by 2026. Nearly 3 times the capacity in just 5 years. That is a serious build-out. But here's the question nobody's really asking out loud. Who's actually going to buy all of it? Because right now, the entire ethanol story has been about petrol blending. The government's E20 program, mixing 20% ethanol into the petrol going into your car or bike. Great headline, solid progress. Except petrol is only a slice of what India actually burns. Diesel? Diesel is 40% of India's total fuel consumption. 40%. And until now, it has been completely untouched by ethanol blending. Zero. Nothing. A giant blank space on the map. So think about it this way. India essentially built a massive orange juice factory, but the country was only drinking orange juice at breakfast. Diesel generator sets. The backup power units running inside factories, hospitals, data centers, telecom towers, shops across the country. That's the lunch, the dinner, and the midnight snack that keeps the whole factory humming. If even a portion of those generators switched to ethanol or a dual fuel setup, think of it like a CNG kit, but for diesel engines. The demand unlocked would be somewhere between 1,300 and 2,000 crore liters of ethanol every single year. That's not a rounding error. That's a demand multiplier that changes the entire equation. India's ethanol supply is racing ahead of what the current market can absorb. And diesel generators are sitting right there as the single largest untapped customer available. So the why is pretty clear. But here's where it gets technical and actually fascinating. How do you even run a diesel generator on ethanol? And does it actually work in the real world? That's exactly what we're getting into next. So now that you know the what, let's get to the part that actually matters to your wallet. Who wins here? Who loses? And what does this mean for your business right now? The clearest winners? Ethanol producers and distilleries. We are talking an additional 1,300 to 2,000 crore liters of annual demand. That does not just stabilize their market, it completely transforms it. Farmers growing sugarcane, maize, and rice win too, because more ethanol demand means more raw material needed, which means better crop prices and far more predictable income. And then there is this brand new business category being born almost overnight. Retrofit technology providers and MSME manufacturers building dual fuel conversion kits for existing diesel generators. Analysts peg that segment alone at 500 to 1,000 crore rupees. That is a real, tangible opportunity. Now, as you can see on the trend chart here, this market is only moving in one direction, up. But not everyone is popping champagne. Traditional diesel generator manufacturers face a genuine obsolescence risk if they do not adapt fast. And if you already own an older diesel generator, you are looking at upfront retrofit costs or new equipment expenses. Real cash flow pressure when margins are already squeezed. Here is the practical read though. If your shop, factory, or office runs on backup diesel power today, your fuel costs are tied to import prices. Volatile, unpredictable, frankly annoying. Ethanol is domestically produced. And with the Make in India push firmly behind this policy, government subsidies are not just possible. They are very likely. Telecom towers, data centers, businesses running generators almost continuously. They stand to save significantly. The shift will not happen overnight, but the direction is locked in. Move early. Retrofit manufacture or supply ethanol, and you capture the best margins. Wait, and you are playing catch up in a market that has already left without you. So the policy groundwork is there. The technology is real. Now, the only question that actually matters. Where do you fit in this, and how do you get ahead of it? Let's zoom out for a second. When India swaps diesel for ethanol in generators, it is not just a fuel switch. It is a money switch. Right now, billions of rupees leave India every year to import crude oil. Every liter of ethanol that replaces diesel keeps that money inside the country. Going to Indian farmers, Indian distilleries, Indian truckers. Economists call this the multiplier effect. Basically, 1 rupee spent rippling into several more rupees of economic activity down the line. And in this case, that ripple is massive. Now, look at this trend line, because it tells the whole story. Demand is rising, and the market is still early stage. If you are in manufacturing or engineering, the dual-fuel retrofit kit market is estimated at 500 to 1,000 crore rupees, and it is wide open. Make in India preferences could give domestic players a serious edge here. If you are in fuel supply or logistics, building ethanol distribution for commercial generator users is quite literally a ground floor opportunity. And if you simply run a business that uses a generator, start evaluating retrofits now before demand spikes and costs follow. There is even an export angle. As India builds this expertise, other developing nations with the same import dependency headache will be watching and buying. The infrastructure is being laid. The intent is clear. The only real question is whether you are going to be a spectator or a participant in what comes next. Follow us for more updates like this. Thanks for watching. And don't forget to follow us on YouTube, Instagram, and X.